Thank you all for tuning in to hear our panelists discuss the future of payments. In 2014, when Overstock.com was the first major merchant to adopt cryptocurrency as payment, this was big news. And in comparison, when you look at the world today, in part due to the impact of COVID-19, businesses and consumers seem to have adapted to digital forms of monetary interactions. And you're now able to purchase everything from your basic Starbucks to your fancy Lamborghini using cryptocurrencies. While some may argue that scalability, accessibility, and operational complexities will continue to pose challenges to the wide-scale adoption and implementation of crypto payments, public and private enterprises are reevaluating their technology infrastructure to incorporate acceptance of crypto payments to take advantage of their various benefits, including real-time settlements, lower transaction fees, and programmability. With us today to discuss the future of retail payments are Leung, Head of FinTech and Invest Hong Kong, John T.H. Yuen, an assistant professor at HKU, and Benedicte Nolens, head of the BIS's Innovation Hub Hong Kong Center. Welcome all. Thank you for joining us. Can I ask you all, before we go into the meat of this panel, to introduce yourselves and briefly touch on your work within the payment sector? Benedicte, let's start with you.
Thank you very much, Kat, for the introduction. So I'm Benedicte Nolens, and I'm the head of the BIS Innovation Hub Hong Kong Center. The BIS is the central bank for the central banks, so we do manage money on behalf of central banks, but also importantly, we are a forum where central banks gather and decide on policy decisions, as well as increasingly on innovation decisions. So within my remit lie topics such as central bank digital currency.
Thank you. John?
Hi, I'm John Yuen. I'm an assistant professor from the Department of Computer Science in the University of Hong Kong. I'm currently teaching FinTech, electronic commerce, and blockchain course here in HKU. And my own research interest is in the area of cryptography, cybersecurity, and privacy. So in the area of payment sector, my research work mainly focuses on the design of secure digital wallets and payment mechanism in the blockchain, such as the privacy-preserving payment channel using smart contract. All right, thank you.
Great, thanks so much. And finally, King.
Hello, everyone. Leung, Head of FinTech Invest Hong Kong. The easiest way to explain my work is that I serve the community. Essentially, when we look at FinTech as an industry, relatively speaking, it's a bit new, albeit has been around for 6-7 years, behind a lot of pushes from HMA, Port, Invest Hong Kong, Science Park, and many other major government institutions and private sector stakeholders. And it's essentially what we do is to try to, number one, bring in national fintech companies to Hong Kong to enrich our ecosystem. At the same time, we work with the financial institutions, the investors, service providers to basically connect them with the fintech ecosystem so that to promote more fintech adoption. At the same time, we work very closely as well with the universities and as well as other stakeholders from research labs like Benedicte's team and so on. So it's truly a great pleasure to talk about a very exciting topic of CBDC today. Thank you.
Thank you. Benedicte, perhaps you can start us off with a brief explanation of what exactly we're looking at when we look at CBDCs, stablecoins, and crypto. What are the differences between each of them, and what are their respective benefits and risks?
Thank you, Kat. Difficult question. So maybe I'll start. I'll start maybe by explaining central bank digital currency. So central bank digital currency is effectively the same as your currency today, but put into a digital format. And currency today, what you're mostly using for payments is indeed central bank currency, i.e. issued by a central bank, such as, for example, HKMA, or the MAS, or the PBC, People's Bank of China. The reason why people use central bank currency for their transactions is because there is an expectation of trust and stability in those currencies that you use. So in some, the large majority of payments globally are in currencies issued by central banks. And typically with the central bank currency, you are doing two types of payments. You may be doing retail payments or you may be doing wholesale payments. Retail payments is, Kat, when I'm paying you for a book you've sold to me, $50. That's, let's say, a retail payment. Wholesale payment is when I'm, for example, a manufacturer and I'm sending widgets offshore and I need to be paid 100 million for that. That would be a wholesale payment. A retail payment typically takes the form of me giving you a bill and increasingly of me making a payment with a QR code. Whereas 100 million payment normally takes the form of a bank transfer. And so for both of these type of payments, the digital evolution has knocked on the door, which means these payments, whether retail or whether wholesale, they can actually be done in different forms from in the past and with different technologies. And the most commonly researched technology in that regard is blockchain. So that brings me then to stablecoins and cryptos. So cryptos and stablecoins were actually the ones that first piloted the use of blockchain for payments. And the idea, as you rightfully said at the introduction, is that if you use blockchains, you can make these payments instant. That is very important. And you can make them theoretically, not always practically, lower cost. Actually, both instant and lower cost are not always the case. So, for example, if you look at Bitcoin, the payment is not instant because people are waiting for confirmations and the confirmation of a block, which takes 10 minutes, I believe. And secondly, they'll wait for several blocks, which could mean up to 30 minutes. And secondly, no cost is also not necessarily the case in cryptocurrency because there are intermediaries who are charging cost in the process. So the theory, nevertheless, was it can be done faster and it can be done lower cost if you use blockchains. So cryptocurrencies are all built on public blockchains. And serve as payment mechanism. What they suffer from is volatility because there is no underlying anchor. As I started with, most payments in the world of today are done in a central bank currency because there is a trust in the central bank and there is a history that the central bank has of keeping its currency relatively stable. Now, for countries who don't have that history, where the currency has been largely fluctuating in wild directions, that would be similar to cryptocurrency. But for the most adopted currencies used for international trade, those are currencies that have a history of a certain level of stability. And so lastly then comes the stablecoin. So the stablecoin tries to exactly mimic that. So what it does is it anchors itself. I mean, the most classic stablecoin, which anchors itself on a central bank currency. So, for example, the US dollar, there are, as you know, about 150 billion worth of stablecoins issued on the US dollar. So how are they distinct from a CBDC? They are the liability of a private company. So theoretically, if that private company goes bankrupt, then theoretically your money is gone. Whereas if a currency is issued by a central bank, the central bank will need to stand in for a failure in its systems. So the security as a user is slightly different between whether the currency is issued by a central bank or whether it's issued by a private company. A second difference is that the stablecoins are issued on public blockchains. And this is very important because that means they're interoperable with public blockchains and with any kinds of applications built on these blockchains. And CBDCs in their current iteration are not interoperable with public blockchains. So I'll leave it at that. I hope that was a solid introduction.
Yeah, that was pretty thorough, Benedicte, and it definitely set the tone. So let's now look at the drive for adoption on the part of merchants and businesses. John, can you comment on some of the problems that exist within today's retail sector and from a global, and look at this if you can, from a global, local, regional standpoint? How also do you see CBDCs in crypto alleviating some of this vulnerability?
Thanks, Kat, for this good question. And I think some of the points already mentioned by Benedicte just before, like the major advantage, like from the merchant's point of view, is, for example, like clearing and settlement time is shorter for crypto, CBDCs, or stablecoin as compared to the current wait, especially when the customer are paying by, for example, credit card, it takes a few days to settle the payment, and also the fees associated with it also. So in the case of crypto, I think Benedicte just mentioned that it takes like 10 minutes to finish a transaction, and also in Bitcoin, and also it takes 1 hour to exactly confirm the transaction. And for the case of stablecoin like USDT, the process would take roughly like 10 minutes. So I believe that if the central bank issues CBDC, it would be faster than that because they may do it in a private blockchain. And also in terms of fees, we know that the transaction fees in some blockchain like Ethereum is very expensive nowadays, especially due to the popularity of NFT recently. But there are also solutions to that, for example, by the use of sidechain or payment channel in Bitcoin or Ethereum. It is possible to reduce the transaction fees by using these new technologies. So it may be some of the advantages for the merchant's point of view for using these new payment systems for retail. How about the shopper's point of view? Yeah.
We can go on to that, or we could leave that for a little bit later, John. If you don't mind, maybe we move on to the next question.
Yeah, sure.
Okay, cool. So King, following on from what we've looked at from the retail point of view, now let's look at infrastructure developments. Seeing as you represent InvestHK, what do you think would need to be implemented to encourage uptake of crypto for retail payments by consumers? And what role do you see the industry and government playing in these efforts?
Well, this is a big topic that we are keeping an eye on and try to offer help. I would say that I will answer this question in two quick angles. First, infrastructure side, there's a movement called the UDPN. I think Benedicte probably has looked at that already, but it essentially stands for Universal Digital Payment Network. But that's mostly focusing on the wholesale side, in which some banks have been invited to join, and behind it is an organization called BSN, Blockchain Service Network, that's been trying to use blockchain in a way, as Benedicte just pointed out, to help the wholesale side to basically speed up and lower costs on the wholesale payments across border. Now, but then the reason why I start with that is because there have been some infrastructure discussion and pilot POCs going on. From the retail side, it's actually, at least from what we've seen, is a different situation. Because at the end of the day, the retail side, in terms of consumers, they need to be convinced about a change of behavior that they have to go through to do something different from what they're doing today, from using the octopus, like Alipay. It's just so convenient. So why would they have to change? So as a result, this is also something that we've been discussing with our colleagues at HMA. And this is why we have launched a program called Global Fast Track Program, in which we have this CBDC track for the first time this year. And in this kind of competition, we've been trying to do crowdsourcing to try to open up to the private sector, extending to banks, FinTech companies, tech companies, to invite them to share with us their creative thinking about what will be the commercial use cases for retail usage. So in a way, I guess to answer the question directly, to us, it's really about the use case, whether or not it makes sense to incentivize the consumers to use it, rather than like a technical problem in the form of an infrastructure.
Thanks. That's a really nice way of leading into our next question. So Benedicte, you and I have had conversations on possible use cases globally for CBDCs and stablecoins. Where do you see, what do you see as possible use cases? And what do you also see as the hurdles for implementations of these use cases, specifically as it relates to CBDCs and stablecoins? Are we looking at programmability being included in this? Are we looking at ways that government can limit how this money is spent, or use it to benefit society as a whole? Where do you see the future of this?
Yeah, so within the Hong Kong Center, we are concentrating on the wholesale use case primarily because Hong Kong, as you know, is a hub, which means that it normally is a hub. It plays a hub role between mainland China and the rest of the world. and it plays a hub role specifically in the context of trade. So the Enbridge platform that we're working on is a wholesale platform, which means that different countries would issue their CBDC on the platform, and banks would connect to the platform and are able to instantly transfer to the other jurisdiction through the use of this currency issued by the central bank directly on the platform. So in some, this can be used for very large payments, as I had indicated in the wholesale space. It can theoretically also be used, though, for smaller payments like remittances. But the core use case is really the large payments, wholesale payments. So the use case there is very clear and basic, is that currently to do these big transfers of money, we need to use the correspondent banking network, and which can take up to a few days to transfer money and to transfer it safely to the other side. Whereas if you put a DLT infrastructure in the middle, using those same features of DLT that were discussed earlier, the transfer can be made instant. So that's the theory or the main use case for wholesale CBDC. It's really for wholesale cross-border payments, and often these payments are in the context of trade. For example, as my example goes, of a manufacturer with 100 million needed for widget payments or semiconductor payments, for example, and it could be settled faster. So I think the wholesale use case in sum is quite clear. Can it technologically be realized? It can be, but still, at the end of the day, you need participation in a system. So I think the latter is where most of the work will be needed, as with any new payment infrastructure. Then on the retail CBDC side, it's more complex question because it is very, very jurisdictional specific. So if you look at Hong Kong, we have very high penetration of even the most basic tool, which is the ATM machine. So you think about it, before all those PSPs, we used the ATM machine. So I've been here 25 years. I used to know where the ATM machines are, and that was my network as to how I function. And on top of that, I have the Octopus card, and I would store my cash at the 7-Eleven on my Octopus card. And frankly, I have enough to get around for a whole week with what I put on my Octopus card. So I had a stored value facility and ATMs, and actually that functioned quite well. If you think about it in the context of many other countries, they don't have a stored value facility like the Octopus. So you would need to go from ATM to a machine to ATM machine, right? And a lot of countries, specifically emerging markets, do not have big ATM networks. So if you're on an island in Indonesia or in the Bahamas, you can't go to the ATM machine. So all you can do is stack up on bills, right? Now, the PSPs have plugged that gap by the QR codes-based payment mechanism, you can nearly say, so everything gone digital. But for a lot of jurisdictions, they still view it as necessary to digitize their currency for monetary sovereignty reasons, because they think it's important that people keep an association with that bill, even though that bill's use may be actually going out of business, so to say. And then lastly, on other use cases, as we a little bit pre-discussed, I think that within, again, it's very market dependent. So other than what I just described, the geographic spread or the financial inclusion issue, there definitely are use cases for programmability of money around, for example, social security payments. Currently, social security payments are done, you know, and we don't have them in Hong Kong, so it's certainly not a use case for Hong Kong. But just think about places in the world where social security is part of the system. These payments are being done without limitation to where that money received can be used. So if let's say I'm poor and I'm getting from a government 1,000x a month, let's say $1,000 or 1,000 euro, a programmable payment could be programmed so that I can only, for example, spend it on necessities, or I can only spend it within certain geographic boundaries. These are use cases that are out there, and I don't think they are being looked into yet. Now, if they were looked into, they provide a lot of opportunity, though, to change some of the economic realities that social security systems are facing. The only country that has been piloting some of that programmability, I should say, though, is China. So China has made payments that you could only spend in certain supermarkets, for example. So that's completely feasible. And whether the world will go in that direction is we'll see what the future tells us.
Thanks for that, Benny. Let's look now specifically, because we talked about the HKMA and the EHKD and, putting it into context with our ATM Octopus network. So the HKMA has been looking at the introduction of an e-Hong Kong dollar. They've also started looking at regulations around stablecoins and developing a regulatory framework around that, specifically focusing on payment-related stablecoins and SVFs. So John, where do you see the use cases of both of these instruments in Hong Kong, given, as Benedicte referenced, the range of payment options that we have currently available to consumers?
Mm-hmm. Yes, if like EHD is made available for retail, then maybe it could allow the HKMA to have a better control of the monetary policy, like the airdrop of money. Like in last 2 years, we have the consumption voucher schemes, where currently the government need to ask for the help from other merchants like the Tap and Go, Alipay, WeChat Pay, etc. And they have to spend millions of dollars for administrative fees. So if the HKMA have their own EHKD, they can issue the money in that way. So it can save the cost for that. And another possible use case would be something like buy now, pay later, which is a kind of short-term financing solution offered by the PAN nowadays. And actually, it can be also offered by a smart contract by using the programmability function of a smart contract. So maybe we can also have other form of new financing option for retail payment as well if we have this programmability in the EHKD. And finally, one also good thing about using that is also related to financial inclusion, like the case of for the elderly or for the young kid who may not have a bank account or credit card to link to their digital wallet. Then maybe the EHKD would also be a possible solution and use case for that. I think that's the things that I can see for now.
Okay, cool. We have a little bit of extra time, so I'm going to throw in a question here on regulations and regulatory oversight. There's obviously been a lot of move on the part of the regulators. We've just looked at the HKMA. We know that the FSB is looking at this, IOSCO, FATF, and we have, I think, quite a global audience. I've been told there's maybe like 400,000 people watching us at this moment in time. So for all of our audience, I know it's a big number, right? So for all of our audience around the world, and given that we have a little bit of extra time, and this is open to anybody here on the panel, where do you see the regulatory winds heading? What do we see as trends in terms of oversight, especially given, the meltdown of Terra Luna, the various other bits of meltdown that's been happening in Singapore, the additional oversight that we're seeing from previously open markets like Singapore, but also the opening of markets in countries like Dubai or the US being a little bit more welcome to looking at legislating around crypto and digital assets. I feel like I should start with Benedicte because she maybe has a head start compared to other panelists on knowledge of this. But if King and John, you could add, I would be grateful for your input. So Benedicte?
Yeah, so I think, to a certain extent, there was quite a lot of regulators who were holding back on regulation, right? And they were doing that primarily for two reasons. One, because they didn't think it was systemic, and regulators do have a bit of a principle that they also need to prioritize their work. So they will focus on areas that are systemic. And secondly, I would think some regulators thought these systems may not continue or may falter. So what we have now is we have a combination of faltering, and at the same time we have increased systemic nature. So what's going to happen is it's just going to accelerate regulation. And I would have said that if regulation had come 3 years ago, or even 5-6 years ago, it would have been very negative for the sector, because the sector wouldn't have even been able to grow to this near systemic size that it's getting towards. It wouldn't have been able to come up with all its use cases, including those that we've described on this call, including stablecoins, or including any of the applications of DeFi. So in sum, had regulation come too early, it could have killed the baby actually in the cradle. If regulation, however, comes now, it may give more confidence to investors, institutional participants, etc. And that confidence is probably needed at this stage for the sector to continue growing. So I guess we're at a very significant transition phase, and that means that applications in the crypto space that are very largely banking on being illegal or banking on not complying with a lot of rules, I think they will struggle at some stage now. Whereas applications that welcome regulation, stablecoins will need to be one of them to thrive. They will need regulation. Those ones, I think, ultimately will have an opportunity to grow. And so for DeFi, it's often seen as the former, but I don't agree with that. It could also be the latter. There are many DeFi applications that could welcome regulation, for example, institutional lending pools. And once they're at that stage of being regulated within a solid framework that institutional investors can rely on, the sector will grow further.
That's true what you say, Benedicte. I mean, it is always this balance when you're looking at regulations between stifling innovation and allowing for consumer protection. So like really great for calling that out. King John, I'm sorry to put you on the spot here, but do you have anything to add?
Yeah, I think I would like to definitely have, I guess, a big shout outs to our colleagues at SFC for sticking to the guns. Now, well, when we look at the regulation, in fact, is now being heard at the Legislative Council, the LEGCO, is the upcoming VASP law. It stands for Virtual Asset Service Provider. Now, essentially what it is to put around the framework. I think part of it is about the AML piece. But there's one thing I just want to highlight in this regulatory discussion. Now, obviously, the past few months, we've seen quite a lot of volatility in the market. And there have been some, I guess, pretty scary stories, right? Particularly after the Terra Luna incident. It's within a few days that there was another article I read about Coinbase. I think it was on Wall Street Journal, where Coinbase came out and said, well, actually, in case we got into financial trouble, we're going to use some of our clients' assets to somehow pay down the utilities and things like that. So therefore, I was like, wow, that I wonder how the market reacted to it. And then look at the stock price of Coinbase, it dropped like 10% within that announcement, right after that announcement. Now, so I think the key point I want to highlight is that in the Hong Kong SFC framework, basically 100% of the client's assets are ring-fenced. And this is this is like super important. This is something that I think for most of us who've been putting money in different online brokerages, this is kind of the norm that most investors expect, right? So my money is my money. Okay, the brokers can do whatever it wants, but then don't touch my money. You're only executing the trade for me. So because of that reason, I can see that because of that Hong Kong gold standard of regulation, particularly for the bigger institutional investors or the professional investors with a bigger sum of money to invest into digital assets, this feature of the Hong Kong regulation is going to really differentiate Hong Kong against some of the other jurisdictions that arguably may be paying catch-up with these recent incidents of several liquidations and blow-ups.
Great, thanks for that, and thanks for bringing it home. John, do you have anything to add, or shall we just move to the last question?
Just a short response. Like we have talked about the regulatory related to the stablecoin, and also the regulatory to the exchange like Coinbase, and also we also may have some of the regulatory issue related to the AML issues related to the transaction itself. So I think this is also a part that needs some technology and also some expertise to work on it. to make sure that everything follows the same rules as the existing banking transactions.
Yeah, I mean, that's good to call out, because it's really important that you have that very solid cooperation between public and private partnerships. So, regulators are always on top of what's happening with technological developments, because they don't know what they don't know. So, okay, thank you all for that. Let's move to our last question before we close this session out. So in closing, it seems like this is the way of the future. People need to know it's coming. What one piece of advice would each of you give to retail consumers so that they understand the impact of retail adoption of stablecoins, CBDCs, and crypto, and how this is going to impact them in their daily life? King, let's start with you.
Well, perhaps a quick answer is, first of all, blockchain-based payments has already taken place. I think it was back in 2018 that Alipay launched this blockchain wallet-to-wallet transaction between Hong Kong and Philippines. So I believe that we asked some of our, the helpers in the Filipino community. I suspect there will be a pretty sizable community using that way to transfer money from Hong Kong to Philippines in a much faster way and low cost. So it's already happening. Now, the reason why I use this as examples, because first of all, the technology in most times will be transparent to the end users. Now, but then I think the one to shout out to the broader audience and the community is that I would highly encourage everybody to embrace all the new FinTech innovation. Be it like investment, it can be payments, it can be online insurance. Because basically, with your participation, then all these fintech companies would get the traction, and with the traction, they're able to raise more money to continue to do more innovation and continue to offer better services to the community. So that's why, for me, I've been spending more time in recent years to talk to the local media, in a way, in an attempt to try to educate more the community, to have the shout outs to the broader society to embrace FinTech.
Great, thank you. John, how about you? What's your one thing that you would give to retail, that one piece of advice?
I think we need more education to the general public, especially relate to the security of the digital wallet, especially when they are dealing with crypto or stablecoin. Because if you lost your key and if you hold your wallet yourself, you lost all your money. So this is quite serious problems. So it is different from resetting your e-banking password or something like this if you do not have a company who's helped you with that. So I think the education of how to secure your wallet is very important.
Yeah, and that I think is an advice for retail in terms of that they need to learn, but also service providers that they need to offer it. It goes both ways there. So yeah. Benedicte, do you mind giving us your final thought on this?
Yeah, so thank you very much. I think, Cap, thanks for the very dynamic panel here. So I think we've had a run around the world of three different but very related topics. The relation is blockchain, but as said, the difference is CBDC being a central bank issued currency and liability, whereas stablecoins and crypto are not. And then the difference between stablecoins and crypto being that one if tethered to a central bank currency is stable, whereas the other one is less stable. We've also, I think, touched on passwords, the importance of the segregation of your assets, which is incredibly important. And I think we've touched a set on the fact that there will be more regulation, including that tug of war between privacy and AML. It's really a tug of war because the user may want privacy, but any government authority doesn't want to see, as I always give as an explicit example, another 9/11. That's not what people want. So there needs to be some form of AML controls. And in the end, for the consumer, I think it will mean more choice. Ultimately, you will have more payment mechanisms. As said, if you think about it in historic evolution, I mentioned ATMs. They're still seen as one of the biggest bank innovations. But then we had the SVFs, and then we have had the PSPs, and now you'll see a lot of this move on to, I think, to this new form that blockchain is. Maybe a final thought, the consumer doesn't need to know what it runs on, as long as it runs smoothly. So some of our prototypes, if you look at the UI, you have no clue that there's a blockchain in the back, and this is probably how it needs to work.
Great. Thank you, all of you, for your very insightful and, given the way the world is, very timely comments on this important structure, this important topic. There's obviously a lot of information here. I hope everyone in the audience has learned something and taken away something that they can ponder on. And with that, I wish you all a good afternoon. Thanks very much for your time.